So with that, I'm going to turn it over to Jan to give us a little bit of an overview of the general trends and activity going on in the M&A world. Obviously, we'll have a lot of discussion around the tech-focused industry, but Jan can help us understand a little bit of the broader scope.
Great, thanks, Phil. First of all, I'm going to go through some key trends that have been going on, particularly in Q1 this year. It's been quite a remarkable quarter. Starting just looking at the global picture first, and I've got a few slides that'll illustrate some of these points in a moment. In this quarter, something happened. $1.3 trillion worth of deals was announced globally. So we'll dive into the charts in a second and illustrate that. US-based deals are roughly half of this activity, and US-based deals are up 160% over Q1 2020. A lot of this is SPACs. We'll show that in a moment, some very big SPACs. Phil mentioned a few minutes ago some of the SPACs that have been going on, but some big names there. And a lot of mega mergers. So a lot of non-SPAC traditional mergers, GE, Cellular, aircraft leasing, and Apollo Global, private equity insurance merger. The mid-market, sub $1 billion deals been very active, especially deals from 100 million up to $1 billion. What are some of the major factors fueling this activity? Clearly last year when the pandemic hit, those of us who were M&A practitioners for many, many years noticed that there was a big drop off in M&A activity in Q2. A number of things have occurred since then. There's obviously a federal stimulus last year, and it supported the junk bond market for deal making. And what we're seeing as these SPACs really came on stream in 2020 is there's been tremendous competition between SPACs and PEs for large and mid-market deals. What we're seeing right now is with the Biden administration tax plans, one of the big things that's affecting the private M&A market is capital gains rates in this country could double from 20% up to 39 or so percent if the Biden plan passes as it's currently written. And a few other things, fear of rising interest rates. 10-year Treasury hit pretty high watermark last week, and highest in a year, 1.77. And FOMO, fear of missing out. So folks are saying, how long are these rate markets going to last? Next slide, Phil. So here, the source of this is Refinitiv, which is co-owned by Thomson Reuters and London Stock Exchange. This shows the global deal making. And what's remarkable, I think hopefully you can see my cursor here, is here is Q1, the 1.3 trillion of deal making right here. These are quarter over quarter numbers. We haven't seen this high watermark since 1980s. And so we can see obviously record amounts of deal activity in this quarter. Next slide, please. Now, the story has been SPACs have been a big part of this story. So again, looking over here to the right, I mentioned the $1.72 billion, $172 billion in Q1. Again, these are SPACs and globally, about 25% of all deal activity so far this year. However, you can see 3/4 of that is non-SPAC deals. So a lot of mega mergers going on. Next slide. So these stats are from a different source, Deal Logic, and thank you to Baird as well. And we've done some analysis on top of that. So this focuses on US deal M&A activity, deals all the way up to including those over $1 billion. So cast your eyes to the right side of this chart, and you'll see that this data goes through just through February. So February this year over February last year. And although the number of deals has gone down, 1,900 and so down to 1,500, the interesting story here is looking at the orange bar. And the orange bar is deal values, and total deal values almost tripled in the 2 months this year versus 2 months last year, 445 billion to 155. And it's really, again, the big story is deals over $1 billion, and SPACs, as we just saw, have been a big contributor to that. Next slide, please. Now, this zeroes in on the middle market activity. So how is middle market defined for the purpose of these statistics? It's transactions up to $1 billion. And so again, casting your eyes to the right side here, we see February year to date versus February year to date last year. Number of transactions has gone up slightly, but again, look at the orange bar, deal values. Deal values are up 35%. And it's really driven by not the lower end of the mid-market, i.e. not deals under 100 million. It's driven by the deals between 100 million up to $1 billion. So again, deals have been getting larger. Next slide, please. So here are some other things notable in the mid-market M&A. Strategic buyers. Now, what we mean by that are industry buyers. So if you're selling a company, companies that are in adjacent or identical industry to the company being sold, we consider those to be strategic buyers versus private equity financial buyers. 80% of all deals are done by strategic buyers. And when we're taking a company to market, we typically focus on finding the strategic buyers because typically they pay better deal values and they pay typically more cash. And this is a fairly, whoops, can you just flip back a second? This is a fairly stable average over 10 years. All cash deals are the norm. So 91% of all deals by number have been cash. And again, this is fairly stable over 10 years. And then the last point is multiples currently, although deal sizes have gotten bigger generally across the board, multiples of EBITDA, earnings before interest, taxes, depreciation, and amortization, as well as multiples of revenue, have remained fairly stable. And again, there's the range for the retrospective going back 10 years. And thanks to Cap IQ and Deal Logic. So